So this market crash, okay, has made a lot of investors quite fearful, okay, and a bit confused, okay, on what to do next, okay, because the market has been keep on dropping, right? So this video, okay, I will share with you what I'm doing, okay, in this market correction, okay, and something, okay, to know how does this tariff work, okay, and whether it will be permanent or is it just a temporary thing, okay. So we all know right now, okay, the market crash is because of the tariff issue, okay, and it causes a lot of uncertainty and recession. Okay, there's a lot of newfound fear right now that the US will go to the recession, okay, and the market may even go down further, right? But the thing is this, right? The market will only recover, okay, when the tariff issue resolves. Okay, but right now it seems that there is a lot of U-turning and stuff, right? So we do not know when it will resolve. Okay, when is it? Now, the key to know when, okay, that this tariff issue may potentially stop, okay, is to know how severe the impact, okay, whether positive or negative, all right, on the country itself. And when we know that, then we can fairly confident, all right, to know when that this issue will resolve itself. Okay, so first things first, okay, we need to know how does the tariff work. Okay, so what is tariff? A tariff is a tax that the government puts on imported goods. Okay, the main purpose is to make the foreign products more expensive. So because of this, okay, they will encourage people to buy locally made goods instead. So the next question is how does it work? Okay, there's a lot of I would say misconception that the tariff is being paid, okay, by the other country. Actually, it's wrong. It's not that, because you need to understand a foreign product first it enters the country. All right. Then the government, okay, adds a tax which is called the tariff, okay, to the price. All right. Then this imported product, okay, it will become more expensive than before. Okay, so why is that? Okay, because when you put the tariff, right, the consumers and the businesses, what they will do, they might buy local alternatives, and the point is to help domestic companies. Okay, so or they pay the higher price, making everyday goods cost more. Okay, now next question: who collects the money from the tariffs? The government is the one collects the money. Yeah, so all tariff revenue goes to the country's treasury. So while taxpayers don't pay it directly, they feel the cost through higher retail prices. Okay. Now the next question, of course, everyone will ask is who is the one paying for it? I will tell you this. It's not the other country paying for it. It is the importers. I repeat, the importers are the one paying the tariff upfront. So let's say, okay, a company A, okay, you import goods from country C. Company is the one that will be paying the tariffs at the custom. When the product reaches the custom, before you enter, they need to pay the tariff, and then you pay at the customs there. If not, you didn't pay, then you cannot bring your products in. Okay. So for example, if this company here imports 1 million worth of clothes, okay, with 145% tariff, for example, I tell you, this company A, they must pay 1.45 million to government A before they can bring their goods worth 1 million to enter the product. So this is how tariffs works. Right? And the importers of that country is the one paying it, not the other country. All right. So at the end of the day, consumers will pay higher prices. Company A will then pass the tariff cost to consumer A, okay, by raising the prices on the final product. Okay, most often this is what's happening. Right? Maybe okay, let's say the tariff is not big. Okay, then company A may want to absorb a bit because they don't want to raise the prices and then chase their customers away. Okay, if they can if they can absorb the cost. But with this kind of high tariffs here, high likely they will have definitely passed the cost to the consumer already. Yeah. So if the TV is originally cost $1,000, okay, a 145% tariff will add $145. $1,450, making the final price $2,450 for the shoppers. So at the end of the day, who is the one paying? The company and then the consumer. Okay, the local consumer. All right. Yeah. So who really bears the cost? Most local businesses, okay, and the own citizens, okay, via the higher prices. But of course, at the end, the government benefits that. Okay, they don't care who is the one paying. At the end, they collected more revenue. But in this case here, because of the tariff, it's at the expense of its own citizens. All right. So what is the effect, okay, of these big tariffs here? Now, first thing you need to understand is there will be immediate price shocks and inflation. Yeah. So prices of consumer goods that you import in, electronics, clothing, toys, and furniture will definitely surge already. Okay, an iPhone that costs 800 today will jump to 1,960. Why? If Apple decide to pass the full tariff here to the consumers. So at the end, inflation will spike, definitely, because things are so expensive. So it will hitting low, middle income citizens the hardest. Yeah. So no one, I tell you, okay, at the end of the day, when it comes to money, no one are willing to pay higher price goods and services. Yeah. And then of course there will be supply chain chaos. You see why? For let's say, okay, country A, their factories rely a lot of parts and products, okay, like from country C. For example, if let's say, they are in cars, electronics, and machinery, right? Let's say you have a factory in country A, but then again, the parts and everything you need to import from country C. All right. So this tariff here will definitely force company A to do what? Okay, number one, if they either can absorb the new cost, but then it will hurt their profits. Okay, when it hurt profits, I will have to cut a job. Okay, or I'll have to scramble to find alternative supplies, which then could take many years. Okay, take years and even cost millions because I already spent years, okay, arranging the supply chain and stuff already, doing negotiations and everything. But this will disrupt everything. Yeah. Okay. Third, there could be retaliation and trade war escalation. So let's say, okay, country A imposes a tariff on country C, but then country C will likely retaliate. Why? Because they will retaliate with another tariff on country A, okay, because they want to reduce orders and sales from country A, right? And then with restrictions on the items which are critical to country A economy. They may do that also. So at the end of the day, right, this could cost country A manufacturers and companies billions in losses. So it is a lose-lose situation. All right, it's a lose-lose situation. So number four, a lot of the arguments, okay, for this tariff is that they want to bring back manufacturing, okay, but I tell you there are limited gains for country A to do this. So even if some production, okay, leaves country C, for example, right, it would most likely shift to other countries with lower costs, not back to country A. All right, why? Because let me tell you, reshoring is slow and very costly. You have to spend billions or even millions building the factories. At the end, you want them to bring back. It's not easy. You want to build again. All right, you have to buy land, you have to find people and stuff. Because factories cannot be rebuilt overnight. It takes years. All right, there will also be issue of capital expenditure, which is up to billions. Then you need to find skilled workers. Okay, the reason why these people have manufacturing in another country is because they have workers there. All right, okay, they are the needed people. If you bring back here, okay, you may not find people who may be willing to work in the factory and manufacturing industry. And then this will definitely take years, okay, to change it. And this to convince people to move their factories, okay, to that country, right, they better be sure that this tariff will be permanent, because it's only advantageous to move back to that country, okay, if they have been protected by the tariff. If let's say suddenly I move my factory to that country, then you remove the tariff, I lost every advantage and I will lose billions. Right? At the end of the day, if I manufacture locally, no one will buy because it's expensive. Then I'd rather buy from import products. So at the end of the day, it's very uncertain right now. Okay, companies won't invest, okay, over uncertain policies. Right. So the next question, of course, you will ask is, will this big tariff be permanent? Will it be permanent? My answer, I'm very confident to say it's no. All right, because there are way more cons than pros on their own business and the citizens and the economy. All right. So what am I doing right now? Okay, what am I doing? Okay, during this market crash here. Now, if you want to know more in detail, okay, you can sign up to my newsletter here. Okay, you can scan the QR code or even click the link, okay, down below here. And the first two emails, okay, the first email here, you will get these two videos here. I do videos and I already laid out, okay, my step-by-step plan on what I've done, okay, to profit from this market crash. All right. Now, this here is where I will provide a summary with you guys. So what I did was I was focusing, okay, on the good performing companies, all right, and then I ignore short-term stock price movement. All right, I focus on the company, I focus on the valuation. Then if it's undervalued, I will continue to average down or even DCA. Okay, and of course I definitely don't time the market, okay, and I always stay vested. Yeah, and I hold if my companies are still doing well. Now, perhaps the next question is you may ask is why stay vested, right? The market has been dropping right now. Okay, I should, why not I exit first? Okay, and then when the time is recovered, okay, there's the market is recovering, or I wait Donald Trump reverse, okay, the tariff, then only I start to enter. Right? Sounds logical, right? But let me tell you, it sounds logical, but it's very difficult to implement. Yeah. So number one, we can never time the bottom or the recovery. No, you will never do that. Okay, we will never know one. So because in this, when you're investing in the moment, there will be no signs. Okay, there won't be someone telling you that, hey, this is the recovery starting. Okay, and this is the bottom, and it's time for you to enter. No. Okay, it won't happen like that. We will never know what will happen next. Okay, and we will never know how the market will even react. Yeah, if let's say you are predicting, okay, that certain things will happen. Let's say you are right. Then the next thing you need to predict is how the market will react to it. Will the market go up? Will the market go down? We will never know. Okay. Then if let's say you exit and you wait, the next question you need to solve is when do you enter back? Right? Because you are making two decisions. First, you make a decision, okay, whether to exit or not. Then second question, when do I enter back? So you see, this is the situation that you will face. If the price keep on going down, let's say you exit already, right? The price go down. Okay, you may feel happy. Oh, good. Luckily, I exited, right? Okay, but if the price continue to go down, first, you won't enter because you want to avoid losses, right? Then, if let's say the price go up, right? I tell you, in your mind, you will not enter also. Why? Because you may worry that this is the fake already, right? Then, if the price continue to go up, I tell you, you still won't enter. Why? Because now it's you will say that it is expensive already, and then you want to wait for the next drop, right? You want to wait for the next drop. Then the cycle happens. Okay, when then next time it drops again, then you no enter because you want to avoid losses. Then it go up, you worry it's fake ready. So this is something that keeps on going into your mind. So that's why we just focus on the what? On the business. Okay. Ignore short-term stock price movement as long as it's performing, valuation, buy it undervalued with some margin of safety, slowly enter. Slowly. All right. Yeah. And then we just stay vested. Okay. Why? This is the most important thing. If you don't want to miss out the big rally, best to slowly add to your undervalued stocks and stay vested. Because once a real and permanent news happens, which means this is, let's say again, a fact for fact, this is the real recovery already, which you do not know. Okay, but at that time it's a recovery, right? Okay, the opportunity may be gone when the price start to go up a lot and fast. Okay, you definitely don't want to miss it. So that's why the best way is to always stay vested. Okay, always willing to stay vested. Okay, right. So I do hope you guys enjoyed this short video here. Hopefully, it give you some idea of what to do. So do remember to subscribe to my newsletter here, where if you subscribe, the first email will be sent to you. Okay, you will know in detail what I did to profit from this market crash. All right. So guys, thanks for watching, and see you in my next video.